Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. Today's stock market picks are going to be pretty on fire. No pun intended. The solar stocks have been a really good trade recently. We're getting a bullish move up now in the market. So here's the big question of the day. Has the stock market reversed the big heavy selling that we've had with the anticipation, which looks like now it's going to be another 3/4 of a basis points from the Fed and from Jerome Powell? Is that bad news already priced in? Is inflation already priced in? And should be looking to buy the dip a little bit more aggressively right now? Has the bull market came back right in front of us over the last 2 days? Or is this simply a bear flag and a much bigger move? We're also going to talk about one of my favorite books of all time, which is probably one of the most important books you could possibly buy with all the ups and downs that we go through as traders and investors and swing traders and day traders and all of the different parts of the market that can absolutely drive you crazy, make you lose confidence in yourself. This book fixes everything. I can't wait to show you what this book is. This is probably a book that I bought in the mid 90s, maybe, and I still have probably my third copy of it at this point. So we're going to do that. We're going to do stock market overview. We're going to do sector rotation. We're going to break down the solar sector, what stocks I'm looking at, which stocks I trade every day. We're also going to take a look at Bitcoin mining stocks. We're going to take a look at coin when we do a little bit of a deeper dive into sector rotation. Also going to take a look at last night's coaching call. I'll give you a quick heads up on that because we covered a ton of topics on last night's call. And I want to make sure that we dive into those. Every coaching call, we ask everybody to post your biggest top 2 challenges, and covered a ton of stuff last night. So we got a lot of stuff to go over today. Some big stuff to maybe even think about over the weekend. I'm going to introduce you to this book. You probably have it, but I'm going to talk about it anyway. So stick around. We're going to be back in just 1 second, okay? All right. So thank you so much for being here today, everybody. I really appreciate it. Whether you're watching it live, whether you're watching it on replay, I just want you to know how grateful I am that you're here with me today. Hopefully I'm doing a good job of expanding the way you see the stock market a little bit, maybe understanding that it's not really about predicting, it's about being prepared. And that was a big topic of last night's conversation. We're actually going to jump straight into the solar stocks. I want to start out there, and then we're going to do a little bit of a backflip into what the market's doing. But first, everybody knows that the market is challenging, right? I don't know that anybody would say otherwise. It really plays with your emotions. There's ups and downs, and some days you feel awesome. Some days you feel like you couldn't hit water if you fell out of a boat. You buy stocks, they go down. You short stocks, they go up. You get out too soon. All this stuff that goes on in your head. I want to give you 2 things. Number one, you're not alone in that happening. It happens to everybody. If you think you're the only person that, oh my God, my stop loss got taken out by a penny, and then the thing did exactly what I thought it was going to do. Oh my God, I booked $1,000 and I should have made $5,000. That stock just kept flying. These are the things where even if you have a trading strategy, your emotions are going up and down. You have to deal with adversity and those kind of things. This book right here, I'm going to pull it in there a little bit easier to read. Success Through a Positive Mental Attitude. Whether anybody wants to admit it or not, we need to have the mental capacity to deal with adversity. Everybody would like trading to be like this one big straight line that goes up. That's not reality. We all know that's not reality. But here's the thing I want to get across. And I'm actually coaching one of my friends personally on this right now. He's having a little bit of a tough time in his life. I got news for you. Everybody has tough days. Everybody has adversity. What makes the difference between somebody who has the most amazing life and appears to have all this success? Those people bounce back quicker. I'm telling you, when we all get together and meet each other personally, I tell you some of the adversity that I've had. It's not about what happens. It's not about what happens in the market. It's about how you handle it. And this book, I'm telling you, Success Through a Positive Mental Attitude, this book will help you with visualization, and it will help you realize that what happens just simply needs to be thought about in a different way, and then you get started again. So pick that up over the weekend. Absolutely worth looking at. So we're going to head on over and we're going to take a look at the solar stocks. First, we want to take a look at the futures. The futures are actually up again this morning. Now, here's a big thing that we get a lot of questions about. Do you watch pre-market futures, and do they influence how you plan to trade when the stock market opens? First part of that is absolutely, of course, it's the very first thing that we look at is how are the futures trading? What can we reasonably expect for the market to open? However, pre-market anticipation and when the market opens. It's two completely different universes, and you don't need any more proof than yesterday. Let's take a quick look at yesterday. This is really the big thing I want to get across. So if we go over to the SPY from yesterday, the S&P 500, and take a look at where we were and how we opened yesterday, we were down a pretty decent amount yesterday prior to the market opening. Right about there is where we closed the previous day, and we opened all the way down here, which might not seem like a big amount, but when you're expecting follow through, and then just before the market opens, Jerome Powell says something, and some more news comes out, and it looks like we're hitting the skids right into 8:30, 9 o'clock, and then the market opens, and you have in your mind big bear market for a big bearish move for the last 3 weeks. Market bounces one day, not that big of a deal. And I want to point this out as well. You actually had the same exact thing happen over there. So you had this big reversal to the upside, and you're like, wow, that's amazing. You know, we all know that's called a bullish U-turn. But then the next day we open higher, and all this selling comes right back in. And then we sell again, right? And you're like, okay, the big bear market's still there, right? Well, we have one day of what we call well bid. So again, super important to understand this language, because one of the biggest questions that we get, and again, I'll show you, this is some of the stuff that we talked about on last night's coaching call, which is understanding and having a structure for trading the market. When you are trading a bearish order flow, which is the dominant buying or selling pressure, in this case, the dominant selling pressure, and you have your stocks now rallying, the biggest question we have is, if it's going down, how do I take advantage of these fast moves that are going up right now? Well, the simple answer, if I was giving advice, let's say Lewis is here. Hey, Lewis, pal, how's it going? Lewis is one of our top members in our community, always participating, always has good positive mental attitude. I feel like it's a commercial right now. You have to think, if the obvious move is down, but your stock is going up right now, should you even participate in that rally? That's a big question, because I'm just going to say it straight up. The easier trades are the ones that are in the direction of dominant order flow. And in this case, the dominant order flow is to the downside. So if you happen to be watching this video at some point in the future, what we're talking about is this: the dominant order flow, bearish gap, bad news, big down day, big move up, big down day. So the recent bearish trend was confirmed right there. We had bearish gap, short rally, and then we got crushed again. And then we got another bearish gap, and then we got another bearish gap, right? That's the dominant order flow. But here's the question, and this comes down to planning and structure. Is it even worth your time to buy a stock that has big picture order flow to the downside and heavy order flow to the downside? And actually, the question that came up was from Eric last night. We were specifically talking about NVIDIA and all of this selling pressure in NVIDIA. Earnings came out, and since earnings came out, it's been getting demolished. But Eric was basically saying there's 2 days worth of buying here. How do I take advantage of that while my puts are making money on the way down? It's a really advanced thing. If I'm going to separate this out into 2 groups. If you're a brand new trader and you see the dominant order flow going down, and again, I want to take a screenshot of this. It's very important. If the dominant order flow is to the downside and your stock is bouncing, if you're a new trader or a trader struggling to find their profit, right? Struggling to increase your P&L, my suggestion, if you were trading my capital, if that's going down and rallying right now, I would not suggest to be looking for spots to buy, because you want to gain your confidence. You want to get that mental bank built up so you can handle any kind of situation. You need to be able to make more distinctions. If you're an advanced trader who has a profitable track record, excuse me, and you can notice and make more distinctions on the shorter time frame, then you need to be dropping down to shorter time frames to make your decisions, which was a big part of what we talked about last night. This big move to the downside, but now on the hourly chart, which you can see here, you're now making decisions on a much, much more micro time frame. So what's super interesting about this is, if you choose to leave this alone because you have that big bearish mindset, this 1 hour of the day is the only hour from a day trading perspective that you should have been involved. Now, that's like, but why? When it did all this move to the upside, it doesn't matter. Your job as a trader, as you're building your confidence, as you're building your trading account, is to first know what perfect looks like. The better you know what perfect looks like, the easier it's going to be for you to say, it's there and I plan to do something, versus it's not there because you know what you're looking for and then you choose to do nothing. One of the most hidden secrets to trading. And I hate to use that word secret because there aren't secrets. There's really just stuff that maybe you don't know yet or don't know how to use yet. When you understand you only need one trading strategy or one way of looking at the market, and you eliminate everything else that's not on that one strategy, you're never overwhelmed anymore. You're only looking for that one thing. But here's the thing. Even if you have that one thing, then you need to discipline yourself to eliminate, to not actually take all the trades that don't have anything to do with this. So the secret that I'm talking about is when you learn to minimize trades that have nothing to do with your trading strategy, you instantly get closer to profitability because now you're not throwing money away and it makes it easier to be net profitable. I just can't express that strongly enough. All right. So now we're going to hop over. We're going to take a look at the solar stocks, which, as we promised today, was going to be a big part of the equation. So we're actually going to sort them by how they traded yesterday. Now, some of them you can see have actually had some really, really big moves recently. And by the way, I'm going to go back to this stock here again, Run. How simple does technical analysis need to be? That is not complicated at all. And I'm talking to you right now. Somebody who's really smart, knows everything about charts, knows everything about technical analysis, probably has 1,000 indicators on your screen. You don't need to make it complicated. You need to make it consistent. We had a big conversation last night as well about what is the proper trailing stop loss to use when a stock hits all-time highs. It's a really good question, but I got news for you. Whether it's an all-time high or whether it's just a breakout, you need to know what kind of trailing stop loss matters. It doesn't matter if it's an all-time high or just a regular breakout. What matters is what kind of volatility and how strong is your edge at that moment. And quite honestly, how fast does it move? And I'm actually going to show you an example from a real trade that came up in our coaching session last night. And I'm going to bring that one up right now, which is ENPH. And you can see the move here so far this week. You have Tuesday, Wednesday, and Thursday. And that's where the stock opened at on Tuesday, 283, and traveled all the way up to 324. That is a $40 move in that stock from Monday's opening price. Now, easy to look at after the fact, right? No, we actually have members of our community in that trade, which is called our calendar trade. It's one of the most exciting things you can do and I make a promise. Again, everything we talk about is for educational purposes, but I promise you, once you go through our program, and I'm not selling you the program, I'm just telling you for a fact, and this is the promise that I make. Once you understand all the things that we're talking about right now, which is understanding the edge, asking good questions, minimizing mistakes, then the last two parts are timing your entries and holding your good trades longer. So right now, Kim, I don't know if Kim's on the call with us right now, but Kim has an amazing trade right now in ENPH using our calendar trade, which is a new strategy that we just came out with probably about a month or two ago. So the question now comes in, all-time highs, parabolic move to the upside, which you can see in this big candle right here. This is a pretty darn big move. So excellent entry on Tuesday and a really big move. So the question then came in is, how do I manage this profit while I still give it some room to go without giving back a decent amount of those profits? So we have a whole structured way of managing this trade, but because this trade had such a big move in the direction of the trade, it was very important for us to have a discussion both in our Discord community on last night's coaching call to discuss this idea. So what I want to do first is I want to show you that I'm not just talking about this. It's actually a part of what we do. So I'm actually going to bring this in and show you the question from last night, which is right here. So you can actually see Kim talking about the trade, talking about the calendar trade, and talking about it because we're now managing this trade from the beginning of the week. And now we're talking about profits. We're talking about how do we manage the trade. We're talking about how do we set this trade up from a reward perspective to give the stock a chance to go, as well as not give those profits back. This is a big thing that a lot of traders don't understand is you don't need to get the perfect exit, but you do need to have an exit strategy. So in this case here, because ENPH, I'll just pull that chart back up just to give everybody a good example of what we're looking at. Because ENPH had this $40 move in Kim's favor, we're now talking about what type of strategy should we be using for this particular stock in the hottest sector. No pun intended, solar stocks. So we're going to go through all the solar stocks. Some of them are 300 all the way down to 20, I believe. So you're going to have a big selection. the biggest thing I want to get across now with the solar group specifically, and I want to do this as well, and I want to keep bringing this in because I love doing these kind of lessons, is when we walk everybody through the stock market power pyramid, which is what this is, right? We start out with the market, and I know John is a big proponent of what we do with the with looking at the market. Then you go up to the sectors. So solars are in the technology sector. Then you work up to the group. So we're looking at the industry groups. So in this case here, the solar stocks have the entire power pyramid stacked, which is why we're getting this amazing, amazing follow through. So as we walk through the solar stocks here, you should be looking at what price range matches your current resources. And again, look at how simple this is, keeping things simple. And then you have FSLR with a really clean, good grinding move to the upside. You don't really have to think too hard about this. Maybe you had a little bit of a change of trend right here, but it never validated the new move. So now you have established where this trend is still valid. So I'm going to go through these so you can pick. Some of them are $24. Some of them are a little bit less, $27, a little bit more. Then you got EMPH at 3 and change. All of these have the minimum criteria that we look for. And if I could just walk you through what that looks like, I'm going to break that down for you a little bit as well. So when you are doing your sector rotation, when you're looking at various markets and areas to trade, it's critical that you first start out with the market. When you have the market on your side, that push that you get in your favor is much more consistent and, quite honestly, much bigger. So we actually happen to have the market bottoming this week while the solar stocks caught a bid. So we had double buying pressure in there. There is more stacked order flow. That's what we do. Order flow stacking is putting these pieces together. So you have stacked order flow in the market, in the sector, which is technology, is actually caught a bid this week too. By the way, did you see Asana yesterday? ASAN. Wow, up 23%, looking for follow through. And Bitcoin, we're going to talk about in a second. Coin, Mara, those stocks that we've been looking at as well. All right. So as you start to break this down and you start to look at the market, you want to work your way up into where the money is flowing. So now what's actually pretty interesting here, now heading into stocks for today, healthcare over the yesterday, as well as healthcare over the last 5 days. Now what's interesting is healthcare and financial strongest yesterday, and we could actually see that in a little bit more detail here. You could actually see as the week is progressing for us with sector rotation, you could see that financial was near the bottom, and healthcare. But now after these 2 strong days, we started to work where healthcare is moving up and financials are moving up. So what does that mean? Which stocks should we now be leaning on within those 2 groups? This is how you start to have confidence where you sit up in your seat and you say, you know what? It doesn't matter what's going on in the market. What matters is I know how to put a good trade together. So these steps that I'm walking you through right now are the steps that give you that confidence. Now, having confidence to find good ideas is the first step. The second step is having the confidence to actually manage the trade, like that trade we're talking about in ENPH with Kim right now, is having the confidence to hold good trades longer and having the discipline to kick out the losing trades that aren't working. Again, if there's a second secret, and I hate to use that word secret, but I keep using it, is when you accept the fact that there's going to be losing trades and you keep your losing trades reasonable. The only other step to successful trading, assuming you have a strategy, is then developing the skill and then developing the discipline to hold those good trades longer. So I want to go all the way back to the solar stocks and the point that I want to bring up about Kim. So in this trade, we now have a decision of how do we manage this winning trade. Now, a lot of people will gravitate over towards moving averages, and there's absolutely nothing wrong with that. We all know that the 50-period moving average is the swing trade moving average, and that's really the intermediate term trend where we're talking about Dow theory. But there's no way in the world that Kim is going to let this trade go all the way back down there in exchange for the next big move. So then you start working your way up into other moving averages, and now we got the 20-period moving average all the way up here, which is still pretty reasonable. But now that is all the way back at Kim's entry point. So we're not going to risk a $40 profit all the way back to a break even, especially on a Friday. Oh my gosh. And then you have the 10-period moving average, which is very close to the 50. So if we could zoom the 20. So these two are right there. So the question that comes in now, in the spirit of managing this trade, great entry by Kim, great job holding it. How do you now manage this without letting this trade go all the way back down to your entry price? And gosh, you don't want to do that, especially on a home run trade like this in a challenging week. $40 on one trade for the week. That's a pretty darn good trade. Now you have to decide, Yes, the market's on our side. Yes, the sector, technology is on our side, and the group in this case, and you pick the winning stock. The last piece of the puzzle to managing these winning trades is how fast has the stock moved recently? And in this case, the stock, ENPH, and the whole sector have moved very, very strong. So we'll continue to just go through this list so everybody can have an idea of some of the ideas that might meet their criteria. Now, what's kind of interesting about this, JKS actually showing relative weakness, so it wouldn't be one of those ideas. A lot of the other stocks are all the way up here breaking out. This stock is still kind of stuck, so this wouldn't be in the list. And then you have CSIQ as well. So what we suggested and what we would talk about in this particular trade is you don't necessarily need to stay on the entry time frame. So what we talked about with Kim yesterday is you have one of two things that you can do. You can choose to then use yesterday's trading range, yesterday's low specifically, and say if it gets below that level, kick it out or take some of it out. It's Friday, having an amazing week. And I want to be clear about this because we always get comments about this after the fact. The trade that Kim is in right now is called a calendar trade. It's a very specific trade that we talk about as the calendar week unfolds. It's a pretty exciting trade, actually, because it's very definitive. Here's the entry, here's the exit, here's the stop loss, and here's how long we plan to trade it. So now you have the challenge. But what if it's still working out? That's two sides to the trade. So obviously the solar stocks are on fire. Again, no pun intended. So now you have that balancing act of I want to try and make more versus I don't want to give the profits back. So the calendar trade is built to discuss between Monday and Friday. So Kim has already achieved that heading into Friday morning, and the stock's down a little bit this morning. So now you have that decision. You can drop down a time frame and use moving averages to manage that profitable trade, or you can let the entire day or the opening play out and then manage that trade from there. It's kind of exciting, though, to be having this conversation about how we're managing winning trades as opposed to I can't find anything. And that's really what trading's all about. I mean, look, we all began trading and opening up an account because we want to have that lifestyle, right? We want to be working 2 hours a day in the morning and then go golfing or whatever the heck we all want to do, right? That can only happen if you have all of this thought out first. We had a good question last night on our coaching call from Angelica, which was about emotions. How do I control my emotions? It's in here somewhere. I forgot where the heck it is, but it's somewhere in here about emotions. I can't find it. Wherever it is in here, there's a question about how do I control my emotions, right? The secret, or I keep using that word secret, but where the heck is it? I don't know. I can't find it, right? I can't find it, but you get the idea. That was an hour and 20-minute call last night. The way to control your emotions when you're trading are two steps. Number one is to accept the dollar amount before you put the trade on. Because think about this. If you go into a trade and you say, I'm willing to risk $500 because I think the probability of profit is pretty good, I'm willing to scale a little bit more. I'm willing to take that risk. But think about that. Before you even put the trade on, you said, I'm willing to accept that risk. I'm willing to accept that dollar amount. If the trade should happen to not work out and move against you, you already accepted that possibility and the dollar amount. And you just get out because it's a part of doing business. It's a cost of doing business. The traders who trade emotionally in their basket cases and every uptick and downtick, your heart's going boom, 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 like you can't even breathe, right? That's because you did not plan out what you plan to do. I promise you, when you start to plan out, I'm okay with that risk, and you plan out what the stop loss looks like, and you plan on if it moves in your favor, when do you move that up to break even, and you plan profit-taking strategies as we just discussed, the whole trade is mapped out before you even put it on. So let's just use, let me find somebody in here. Iman. Let's use Iman as an example. Good morning, Iman. So if we say to Iman, I'm going to give you this document right now, and this is going to tell you everything to do in this trade. It's my money. You just have to manage it. If it goes up or goes down or does this, you add more shares there. If it goes up a certain amount, then you use this trailing profit. Do you think Iman can do that? Or let's say Andrew, do you think Andrew can do that? Of course. Why can't we do it when we're doing that for ourselves? That's where we need to elevate our thinking a little bit and understand that trading is a business, no different than owning a deli or a restaurant or any of those kind of things. It's a business that has expenses. So to get rid of your emotions in your trading, you just have to start treating it like a business. The problem that a lot of people have with that is they trade too big and they can't emotionally accept the dollar amount of the risk. That's a big thing. Once you are trading the right risk for where you are right now in your trading journey and the size of your account, that number starts to go up as your track record and your ability for your company to make money, your trading company, when your revenues grow, you can take on more expenses. You can expand that office, and take on expanding the office in trading terms is risk more on an initial trade. So then you also add all the other pieces into the trade, which is the probability of the trade, which is something I want to talk about right here. I just want to make sure I can find it right here. This was a great question from last night's coaching call. Probability, risk, and reward, and why do you need to consider all three? So what I want to talk about right now is critical. Everything that we talk about, order flow stacking, setting up the ideas, order flow stacking, which is what we just showed you with the power pyramid and a bunch of other things that we're not going to go into today. That's the probability of follow through. The last part of the trade, though, see, that's the first part. The first part is, what are the odds of it going in our direction, right? Got that, right? But the part that a lot of people miss is the second part, is what is a realistic profit in that direction we just believe it's still going to go? What's a realistic profit if I buy right now, and what is the risk I have to take for that? That's the risk reward part. So it's not which one is more important, probability or risk reward. It's peanut butter and jelly. You have to use the two of them together, because if something is obvious but too far from the optimal entry, then the risk reward might not be that great. It might not even be worth taking the trade. So when you put on your next trade, the last thing before you hit that buy button, you have to say to yourself, what's the likely reward for the risk I have to take right now for this trade? And we actually just talked about the risk, the dollar amount. So before you hit that buy button, if you say I could make 10, but I have to risk 9, that's a silly trade. That makes you a break-even trader. But if you say I could make 10 and I only need to risk 3, now we're cooking with gas. Now we're looking at a better trade. So risk reward and edge both go together. So I want to do two other things right now. I'm going to scroll down. If you want, you can either watch this again, but I want to show you all the stuff that we talked about last night, because it's kind of important to have some ideas, right? Big part of last night, which we just talked about in the NVIDIA trade. NVIDIA has harmony that's bearish to the downside, which is order flow, versus taking that trade to the upside. Very, very important to understand the difference in how you're going to manage those trades. We just talked about parabolic moves and talking about big entries in that direction. Big thing here also, good question by Andy last night about working the list once you have your list, and then working the list as the market's open. First part is having the right list, and the second part is working that list. One other thing I want to talk about today is this. I want to talk about understanding how to game plan properly. So the sheet that I'm showing you right now is a sample of our newsletter this week. We get a ton of questions. Customer service reaches out to us. How do you guys structure your ideas? Do you guys do swing trading and day trading? Of course we do swing trading. It's a big part of what we do. So what I want to do for you today is I want to give you a sample of this week's newsletter. It's our swing trade newsletter from Monday through Friday. So it's actually applicable today. You can click down there. In the description below this video, you'll see a link to get into our Facebook group. Pop into our Facebook group. You'll see a post in there to get access to our swing trade research newsletter for this week, and our team will reach out to you and give it to you. It's very important because I'm going to show you Monday. I'm going to show you how the week progressed. Obviously, the week started on Tuesday. And again, we always start out with the market and do a deep dive into what the market's doing. Then we look at the rotation in the market. We take a look at which stocks are in sync with what the market's doing. Then we break it down into any significant news that matters. Then we break it down to individual setups and how we plan to trade those setups. Now, remember what I just said before about trading emotionally. When you are trading with a plan, and I know everybody knows, we all know we need a trading plan, right? It's the truth. Realistically, is it easier to know exactly what you plan to do than to emotionally react with every uptick and downtick in the market? We all know the answer, right? The answer is obvious. So what I'm trying to do in this document that I'm sharing with you right now, again, all you got to do is go into the Facebook group and our team will give it to you. This is the process that I want you to start thinking through. How much of this am I doing now versus, oh my gosh, I'm not doing any of this right now. I'm just watching CNBC at night and picking out anything that somebody calls out, or I'm in a chat room or any of those kind of things, or I'm running one scan. The more you structure what you're doing, the more you say, that's what I'm looking for, and this is the steps that I need to find that, oh my gosh, trading becomes so much more fun. It becomes so much more business-like, which is really why it becomes fun. And in best case scenario, you kick out those losers, you learn how to hang on to the winners. Profitable trading, living life on your terms. Isn't that what we all really want? Isn't that why we're here early in the morning having these conversations? And if you happen to be watching this video later. So again, the research document is here for you. You can actually get into the Facebook group. We'll give you the entire thing, and you can keep an eye on that. I want to continue to scroll through some of the questions here so you can actually see what we talked about last night. Trading platforms is a very big question that we get as well. Just as an aside here, most of our private Discord community trades using Thinkorswim, which is TD Ameritrade, or TradeStation. Those are the top two. I think some other members use Interactive Brokers or Charles Schwab, but I would say probably 80% of the community uses those two. TradeStation, probably the more popular one by a lot, or Thinkorswim is the most popular one, which is TD Ameritrade, or TradeStation, which is the one that I happen to use. We actually have some videos on here on how to set up a TradeStation screen as well. Let's see. What is Scott saying? If you're not using risk capital, yeah, 100%, Scott. Absolutely. That's very, very true. Very, very true. All right. Anyway, we're going to take off. Hope everybody has an amazing day today. We're looking for one more day in the route. Now, the big thing I want to talk about today, if you go back to the video that we did on Wednesday, we said, is it time to bottom fish? And we talked about why we thought the market was going to reverse. And actually, we did reverse, right? Here's the big thing. The market's still bearish, and we're going to have a big higher opening, at least as of right now. I know we got some news coming out in a couple of minutes. Keep an eye on Bitcoin-related stocks today. They're up a lot. So let's actually go through a couple of those, and we'll kind of take a look at those. We're going to take a look at Mara, Bitcoin mining stock. This is one of the ones that we watch. It's up 7% right now. Riot, and I believe Coin is up a pretty good amount this morning as well. It's up 6.5%, up $4.76. It's all the way up at $77, almost $78. Now, here's the thing. I'm not warning you. I'm telling you how I'm planning to prepare for the day. Yesterday, we had a big move to the downside on the open, and we rallied. Today, we're going to get a big move higher on the open. Let's make sure it stays there. A big thing with whether you're day trading or swing trading, you need a little bit of feedback. So if you're day trading, let the market unfold before you start getting in there aggressively, getting too hyped up on the higher opening. Let's hope it continues because it's easier to buy. However, if we're looking on the swing trading side of things and we missed the optimal entry, which a lot of those solar stocks, they're probably a little bit beyond the optimal entry. We need to wait for a pause for a new entry. Wait till the end of the day today to initiate a new swing trade in order to get some feedback after this 3-day rally and 2-day rally in today's higher open before you put on a new trade, because we can't forget that we're in that bigger move to the downside. All right. Click into the Facebook group, get your copy of that swing trade newsletter. Our team will give it to you. Have an awesome day of trading, and I'll speak to you soon. Thanks so much for being here with me today. I really appreciate it. Take care now.